If you are a first-time home buyer, it can feel a bit more challenging these days. Old National Bank has some mortgage options to help you decide which program could be right for you.
Neil Coleman tells us how.
For first-time home buyers, we have programs where they can get in a home with as little as 3% down. We have an FHA program where they can get in with 3.5% down. And our VA program for retired and current military personnel, they can get into a home with as little as 0% down.
Wow.
Yeah.
I always thought the old adage was 20% down was kind of the general rule. You don't have to have that much cash?
No, not anymore. That's a general, I mean, it's a common misconception.
Okay.
But it's really hard in today's economy to save 20% with the rising cost of housing, student loans, which may or may not still affect people, and then the shockingly high cost of rent these days. So these programs help people get in with less than 20%.
What are some of the first steps people need to take if they're considering buying that first home?
I would say the best thing to do is to get pre-approved. And you can do that with a mortgage lender, a mortgage bank with me. And basically what it is, we'll take some information, we'll pull your credit, let you know where you stand credit-wise. We'll get some verbal information about your income, and then try to how much you have to put down. It's pretty simple. I tell people it's like CIA, credit, income, assets.
Okay.
So your credit score needs to be a certain point. Your income versus your monthly debts has to be at a certain ratio, and then you have to have enough to put down typically of your own money, but there are down payment assistance programs also available that we also do.
For first-time home buyers, it sounds very daunting. There's a lot of language that people don't understand,
Absolutely.
right?
Yeah.
And so as they start to go down this path, is there anything that you can say to them to reassure them as they're starting to look for a home and they can't find a home, or maybe they found it right away, and it's very concerning?
There's a lot people don't know, and what I try to remember is that even though I do this every day, and I have for a long time,
yeah.
My 3 children bought homes in the very recent past, and I helped them, and so I know that deer in the headlights look where they, you say, do you want escrow, and they're like, what? You know?
Yeah.
So I'm aware of that all the time, and even with more seasoned buyers, they don't do it. They haven't bought a house in 20 years or 25 years, and they're not used to what's being required these days.
In terms of mortgages, someone buys a house today. What if rates drop in 3 years? What do they do then?
Typically, to lower your rate, you're going to have to refinance. And that's a very doable thing. After 3 years, you should have built up some equity. So rates where they are now, and say in 3 years they drop to a point where it makes sense to refinance. It has to make sense,
right,
just because it drops. And if it makes sense and you're going to save money, then most likely you'll be able to do that if you qualified at the higher rate 3 years prior.
So for folks who are just starting to get into it, what can you help them do, and how can you help them make this whole process a lot smoother?
I would say let's have a conversation. Have a conversation with the mortgage professional that you know and trust. Talk about your credit, talk about your income, talk about your employment history. That's actually as or more important than your income, because you can't have just started a job. You can't have spotty job history. What you can have is if you graduated in a nursing school or a teacher and you're just starting your first job, we can still count that. That counts as job history for those types of situations. But if someone has been off since March of 20 for COVID, and they're just started getting back to work, that's going to be difficult. So you want to get that job history going, and typically we look for 2 years. 2
years is probably the best way to go. So, there's the student loan forgiveness program. What if your loans are being forgiven and you're now kind of starting a new chapter in your life? Is that going to make it harder to get a home?
Student loans right now, we still have to assess a monthly payment to the student loans, even if they are in forbearance. Okay. Because I don't think they're quite forgiven yet officially.
Yeah, it's very new.
So depending on the loan, we have to attribute a 1% or in some cases a 0.5% of the balance of that loan as a monthly payment. Okay.
So there's a lot of factors to consider. But
Absolutely.
As you said in the beginning, it is doable, and there are assistance programs out there.
Absolutely, yes. There's one of the great programs out there that we have that a lot of places don't have access to is through down payment programs through the Illinois Housing Development Authority, commonly known as IDA. And they offer home buyers anywhere, right now the programs are anywhere from $6,000 to $10,000 in down payment assistance. And the good news is that they were originally designed for first-time home buyers, but now a lot of the programs are for all home buyers as long as they qualify. These programs with IDA are good throughout the state of Illinois, and we have a similar program for the state of Indiana.
All right, you can call or email Neil for more information. His information is there on the screen. Or you can visit Old National online at oldnational.com/mortgage.